Hello, hi, namaskar to all the students. See, in the earlier session, we have completed almost seven classes, seven problems on depreciation chapter, right? In the recent session, I started a problem on depreciation wherein the method of depreciation is being changed. For a few number of years, the problem is being solved under diminishing balance method. After that, the method is changed into the what method? Under the original cost method. Am I right, my dear student? Similarly, we are having a one more problem of this type from your study material. This is a question from your CA Foundation manual. It is a 10th illustration, my dear students. See what happened here. Mr. Anshul and Company commenced business on January 9, 2015 when they purchased a plant and equipment for 7 lakh. So this is the first plant value. First plant is purchased on when? The first plant is purchased on January 15 for an amount of rupees 7 lakh. Okay, you got it, my dear student, what he is telling. See what happened in the next session. Charging depreciation 15% per annum under a diminishing balance method. Under a diminishing balance method means DBM method. Okay. Their purchase the plant here on January 16, second plant is purchased. On January 19, third plant is purchased. See, the second plant is purchased on January 16. The third plant is purchased on 1st January 19. This is all about the date on which the second plant and the third plants are purchased. On January 19, it was decided to change the method of depreciation. Now they are changed. Now they have changed the method of depreciation to the straight line basis. What do you mean by straight line basis? Straight line method, also known as OCM method. On this date, remaining useful life assessed 6 years. What is the remaining useful life? Assessed 6 years. For those assets which are purchased before January 19. See what and all the assets purchased before 1st January 19. Go back to your previous page. This is a plant purchased before January 19. This is also a second plant purchased before January 19. The life of these two plants is termed as what? 6 years, right? So I can say that plant 1 is purchased before January 19, its life is 6 years. Plant 2 is also purchased before January 19, the life is 6 years. With no scrap value. No scrap value means scrap value is 0. बाद में क्या दिए उन्हें? And 10 years for the asset purchased on January 19. So on January 19, which plant is purchased? On January 19, the third plant is purchased. So the plant life of third plant life is how many years? 10 years. What you have to calculate? Required to calculate the depreciation to be adjusted for December 19. So we can say that accounts are closed on December 19. Shall we move on? So now my dear student, what we can write here? So let us write. Let us start our solution. Wait for few seconds. Now let me write. Now what? Depreciation. What percent? 15%. Under what method? Under DBM method. From when the method of depreciation is changed? From 1st January 19, depreciation is OCM method or straight line method. Are you given with rate of depreciation? No, rate of depreciation is not given. When the accounts are closed, closing date. Accounts are closed on 31st December every year. Now my dear student, how many plant that they are purchased? How many plants are being purchased? They purchased 3 plants, right? Plant 1 is purchased on 1st January 15. Plant 2 is purchased on 1st January 16. Plant 3 is purchased on 1st January 19. The plant 1 is purchased for how much? The plant 1 is purchased for an amount of 7 lakh. The plant 2 is purchased on January 16 for 1.5 lakh. Plant 3 was purchased for 2 lakh on January 19. So what we should write? 1st January 15 we have to write the cost. Okay. Now the closing date is when? Accounts are closed on 31st December 15. Depreciation 15% under DBM method. What plant we have? We have a plant 1. For how many months? For 12 months, because purchased on January 15, closing on December 15. Take the calculator, 7 lakh into 15% into 12 by 12, it comes to rupees 1 lakh 5,000 dash dash. Now on January 16 we are getting a balance. It comes to rupees 5 lakh 95,000, 1.5 lakh and 2 lakhs. Fine. Let us move on to next date, 31st December 16. Depreciation 15% under which method? Under DBM method. How many plants do we have in second year? In second year we have a plant 1, and also plant 2. Plant 1 12 months. Plant 2 is also purchased on January 16. We have to calculate again depreciation for 12 months. So 5,95,000 into 15% into 12 by 12, it comes to rupees 89,250. Use a calci and work out. It comes to rupees 22,500. Now you can find out the balance. The balance comes on what date? The balance comes on 1st January 17. How much? 5 lakh 5,750. Here it comes to 1 lakh 27,500. Here it comes to rupees 2 lakhs. Now let us move on to next date. 31st December 17, depreciation 15% under DBM method. Right? We have a plant 1 again for 12 months. Plant 2 is also for 12 months. 5 lakh 5,750, 15% into 12 by 12, it comes to rupees 64,483. Here it comes 16,256. No depreciation for third one. Now you go for next date. What is that next date? 1st January 18. Balance. Subtract 5 lakh 5,750 minus 64,483. It comes to rupees 4 lakh 29,887, 1 lakh 8,375, same 2 lakh. Still one more year on December 18. Depreciation is what percent? Depreciation is same 15% under DBM method. For plant 1, same 12 months. For plant 2, same 12 months. Take 4,29,887 into 15 by 100, 12 by 12, it comes to 64,483. This is changed. 75,863 and this one is 19,125. This is for 17 year. Okay, now it is for 18. 64,483, 16,256. Now we are getting balance. Balance on what date? 1st January 19. Balance. It comes to 3,65,404, 9,219 and 2 lakh. Got it? Now we are on January 19. Here what happened? 31st December 19, depreciation is OCM method. Are you given with rate of depreciation? See my dear children, rate of depreciation is not given. When under OCM method, rate of depreciation is not given, we have to apply the formula. What is that? Cost minus scrap by life. How much life? As per the previous calculation, we came to know that plant 1, plant 2 had a life of 6 years and plant 3 had a life of 10 years. Here I will write plant 1 6 years, plant 2 6 years, plant 3 10 years. Let me write for plant 1. What is a cost? This is called cost. 3,65,404. No scrap value. Life is 6 years. Plant 2. 92,119 minus 0 by 6 years. Plant 3. 2 lakhs. No scrap. Life is 10 years. The depreciation comes how much? The depreciation comes to rupees 60,901, 15,353 and 20,000. Now you work out a balance. Balance on when? 1st January 20 as a balance. It comes to 3,04,504, 76,766 and 1,80,000. My dear children, finally what he asked you to calculate? Calculate the depreciation, that's all, to be adjusted. No need to prepare any ledger. Depreciation for 31st December 2019. Plant 1, plant 2, plant 3. How much it is? 60,901. Plant 2, 15,353. Plant 3, 20,000. Work out the total. The total depreciation to be adjusted is 96,254. This is what the depreciation to be adjusted. I hope you got it, my dear students. This is how we have to do. Especially depreciation chapter is having a little bit of clerical work. It requires too much of manual work. Okay. Thank you. Take care. Bye-bye.